So there's several big ecosystems out there between Bitcoin, Ethereum, Ripple, EOS. How do you see the evolution of those, and how do they all play together? I'm incredibly concerned how tribal it all is right now, but I kind of know in a pragmatic world that there's a space for everybody. What's your view on all of that?
Yeah, it's a fascinating question. I'm sure there's going to be some great movies made about this someday. I would say there isn't a space for everybody, but there isn't a winner take all. And so that's a really frustrating kind of lukewarm water answer to your question, is that we have 2,000 tokens right now. I don't think we're going to have 2,000, and I don't think we're going to have just one. And there is a bit of a almost religious fervor in this space where, the disciples of one group will be, really, really excited about the other group. And so the punchline of this whole long diatribe is I think there's going to be a single-digit number of very important blockchains. Each one's going to have its own use case. And it's already starting to shape up where you're seeing, Bitcoin not really change very much, but be really good at storing wealth. And so people like to call it digital gold, and I'm fine with that. You see Ethereum be really dynamic, and they're already going to Ethereum 2.0, and it's really changing, really ambitious. And then you have kind of the next generation of things like Polkadot that are coming, that are doing very ambitious things. And then Ripple's taken a kind of enterprise SaaS version of this and trying to work with all the banks and work with all the regulators to essentially replace SWIFT. They probably don't like it when I say it like that, but I think it's the easiest shorthand for what they're trying to do. So I think there's space for 8 or 10 of those use cases in the long run. We're not going to, but the main point is we're not going to have hundreds and hundreds of very similar quote altcoins.
And what is your view of tokenization? My particular view is that what we know of equities and fixed income won't exist within X period of time, whatever that period of time is, because tokenization can do a whole lot of things that currently equities can't do or fixed income can't do. You can isolate, I always use a great example, like a company like Exxon. Maybe you want to buy their upstream and I want to buy their new green energy business, and somebody else wants to have an investment in some of their assets, in their physical buildings. I mean, the idea of a corporation, which is to turn a company into a physical person by legal rights, I don't think has to exist in this world. I kind of think that there's a huge change coming on what can be tokenized. We've seen it with people. Obviously, sports stars will start to tokenize themselves. There's a number of things. I just think the securities markets that we know of old, if we go into the future 20 years, will not look anything like the securities markets that exist today and have existed for the last 100 years or so, 200 years.
Yeah, Raoul, I'd say that the things that don't work very well now, like, say, music royalty rights, wow, blockchain can add a ton. That's a great example of where, there's millions and millions of transactions happening every day. Each one's worth a fraction of a penny. There are often dozens of different people who own a piece of that work that's being streamed somewhere. And then you have a whole industry of these middlemen, accountants, agents, whatever, that are processing the payments. And, they call it Hollywood accounting for a reason. Like, the money always seems to get lost and the artist, ends up with a very small fraction of it. So the blockchain could do an amazing fix to those broken systems like that. So I think those are going to be, really, really important. Replacing existing IBM shares or whatever, I'm less bullish on. Again, going back, the DTCC does a great job. It's almost free. It takes only a day or two, so it's not really broken. I started my career as a CMO trader, so you're slicing up cash flows like you were talking about on upstream versus downstream. And there are some uses for that. There are some people that want that, but I'm not sure it's a big enough use case. And there was a huge push to do, securitized illiquid market assets like real estate a couple of years ago. And we invested in a couple of projects and looked at a ton of projects. And there was a lot of talk about, if you invest in, commercial real estate, it's really illiquid, and if you tokenize it, it'll be completely different. And some people did some projects and you realize, oops, maybe not everybody wants to buy a fraction of a building in South Carolina. So, just because it's a token doesn't mean there's going to be 1,000 people lining up under a buttonwood tree somewhere to start trading it. And that would be my only caution, is that just because it's a token doesn't mean there's going to be 1,000 people that are excited about trading it.
No, I mean, there's no liquidity, and it's very early days. I'm just conceptually interested in where this could lead to, because, if this is essentially an invention and a revolution all combined, well, then most of us will not be able to forecast the probabilities of the outcomes. The outcomes are going to be very different than we think with something so life-changing as this. Much like the internet, we had no idea where that was going to go.
Yeah, and so the one thing I would say that on securitizing actual normal physical assets is it might not change your or my life, because we have accounts in the United States and trade those kind of things. But if you're one of the 6 billion people that's not involved in that, securitizing would be great. Like if you think back to the .com boom, if you wanted to buy a share of pets.com, you actually had to be an American citizen. Even like a wealthy German would have a hard time figuring out how to get a hold of some pets.com stock. Here, anybody with a smartphone can buy a tokenized security. So it will massively open up the access across borders for securitized assets, even IBM shares. Somebody in Indonesia with a smartphone could be able to buy a tokenized version of that.
Looping back to the macro scene where we are right now, people are confused why Bitcoin's not done so well, because I think they're thinking of it as a hedge to traditional markets. And I see it slightly differently. I see it as a call option on the future, on a future system. But how do you perceive it, and what do you think about the price action of Bitcoin and how this might evolve over this, call it next 24 months?
Yeah, it's a great question. Obviously, that's what we spend our time trying to figure out. The one thing I would say is I don't think I would have called it a hedge to the global macro. What I would have said is it's uncorrelated with global macro. So that is, I think, its strongest advantage is over long periods of time, it has very little correlation to everything else, to gold, oil, S&P 500. In the down spikes, there have been 5 down spikes since Bitcoin really became tradable. And in each of those, it's been an average of 8 weeks correlated with a 0.5 positive correlation to the S&P. And so when the markets gap straight down, Bitcoin does gap straight down with it. But over a period of weeks, that correlation starts to break down and it starts to trade on its own, based on its own fundamentals. And so when this crisis started, we actually reduced risk in our hedge funds. But we've already covered that back and are now fully long in our discretionary funds. Because as the dust settles, the correlations are going to break down again like they have historically, and it'll be able to trade on its own. And then when people see, Bitcoin and other blockchains are actually quite useful, when a bunch of these other systems are starting to, get hampered by all the restrictions in the physical world, people will start realizing the fundamentals are not only unaffected by this crisis, they're actually, quite positive for blockchain itself. And so our forecast is Bitcoin's probably going to do, very well, but it's over the next 12 months, not the next 12 hours. And what we said in our investor letter a couple weeks ago is we think it's going to take 2 or 3 months for institutional investors to basically just triage the damage to their existing portfolio assets, just try to figure out what the heck just happened. And then it's going to take 3 to 6 months to really look at new opportunities, like distressed debt, right? There was 10 years of no distress at all, and now there's going to be all kinds of amazing opportunities. There's going to be things like gold and cryptocurrencies. And so I think it is going to take 6 to 9 months for the markets really to get going. But I think everything, we've taken a super sober look at this, and there's some really big economic impacts. But the only conclusion we can come to for cryptocurrency is that in the, say, 6 to 9 month time frame, it is going to be very positive.
Yeah, I mean, one of the things that correlation that picks up between the S&P is simply liquidity. So, everything has a correlation of 1 in a liquidity event, and that's okay. But as you say, it then decouples very quickly. Then it has 0 correlation, which is extraordinarily powerful as an asset. That has, it's not a huge asset. It's still whatever, 200 billion or just under. But It it's very powerful to have an uncorrelated asset in this world. And everybody I speak to is definitely becoming interested. The family offices. I don't know a family office really that doesn't have a bit of it now.
Yeah, and so we've taken that thought process one step lower in our analysis, and within blockchain, we have a very similar phenomenon going on. Is that in the immediate down spike, everything becomes highly correlated, and Bitcoin typically outperforms, and so it has outperformed everything else in these stressed markets. So one of our first moves was to increase, basically double our Bitcoin exposure at the expense of the smaller non-Bitcoin assets. And then we also increased our systematic trading, which does well in very stressed markets. And so another view we hold in crypto is that Bitcoin is going to outperform, again, for a period of, say, 3, 4, 5 weeks, that kind of order of magnitude, not months or years. And then, over time, we'll reduce that and get back to our normal allocation.